let's get to the 13Fs, something we both like to do. Daniel, what did you notice? I will say this before we start with 13Fs, right? When we go to 13Fs, these are all the hedge fund managers. Everyone who manages, I believe, over $100 million. They have to file all of their trades, their stocks and their buys or sells and positions every quarter, right? So they do it, the quarter ends, and you have like another, I think it's like the 2-week period right now, which is into August to do it. So this is pre-August, 3 months. So if you're looking at any sells from these guys, which I heard on CNBC and Fox Business as well, where they're like, wow, these guys are really blowing out of technology companies. That was 3 months ago. The low was last quarter, which was mid-June. The NASDAQ is up 20% since then. They were blowing out of everything like crazy. I mean, we saw 11 out of 12 weeks, the market came down. Technology was getting murdered. These guys are pulling out like crazy. So you're going to see a lot of sells. A lot of these companies they're probably getting back into, or they might have got into right now. So I wouldn't look at these and say, look at what they sold. For me, I will look at what they buy. And Dan, you made a good case also of what to look at when it comes to 13Fs is, what they're adding to as well.
Right.
That's more relevant right now looking at 13Fs.
I think so, because of the environment we're in, we've had such volatility. You have this huge pullback. To your point, these guys, some of the hedge funds that you look in, more of the popular ones are more traders anyway. So they have a lot of turnover, meaning they're in and out of different names at a high rate. David Einhorn, who is your straight of the cross for the most part value investor, he was added. There's been a few new positions, but again, I don't want to look at that right now with the environment. Increased positions. Is it Kindle? How do you pronounce it? IBM spun off. KD is the ticker symbol.
Yes.
He added to that some. He did a real good job at AAWW, which is Atlas Worldwide. They got bought out. So if he was buying that stock was tanking. What stood out to me is Dan Loeb, and this is a good segue, but we don't have to get to your Disney just yet, Frank. But Loeb added to CVE. He went from 2 million shares to 7.28 million shares. Mm-hmm. That's a Canadian oil and gas producer. Mm-hmm. He also added to OVV. He went from 2.25 million to 6 million shares in OVV, which is a U.S. oil and gas producer. I know oil and gas is pulling back. It's dropped to what? 6 months lows, I believe. It's down 30% at least from its highs. I'm talking
90.
I'm talking
I
oil.
didn't see where it was today, but yesterday it was below 90.
And of course, the biggest and boring and the capitalist crush that I have right now on Berkshire Hathaway, Buffett continues to add. He's above 20% in Occidental now. He added to Ally Financial, Frank. The automotive, not just automotive, but a lot of automotive financing. They increased their stake from just under 9 million shares to 30 million.
That's very big, yeah.
That is significant. That makes me, with autos, with supply chains easing, it's not a new position, it's an increased position.
It's Buffett.
This is Berkshire Hathaway, yes. That is a massive amount that when you got regular analysts like me out there, hey, when you see some of these guys stepping up and adding millions of shares, that's worth making a checklist, starting to go through those more and more as time goes on, and at least following those. I know I've been wrong on the energy right now. I don't think that's a trade. I think that's a longer term thing, but it's interesting to me to see these guys put money, especially Loeb, into energy as well as Berkshire Hathaway.
Yeah, I think a lot of them were exiting energy too. That's been one of the greatest trades. One of the only things, if not the only thing, that did very, very well in the first half of the year. But we've seen the sell-off in that. And even oil prices, holding steady here. Oh, actually not holding steady. Oil prices coming down. The stocks have actually performed well, I think, over the past week. You're seeing a nice bid under the stocks, even because oil price at 90, these guys still print money. At 130, it's a joke. But at 90, there was zero. Right, the futures pricing in zero, 18 months, 24 months ago? So, someone who follows the oil industry.
And you're comparing to 2 years ago and a year ago, you're still significantly higher.
Significantly higher.
$80 is great. What was it, 70-some a year ago and 40-ish, probably mid-40s?
They're making profits easily at 60. Outside of the deep water drillers. That's higher. But some of these guys can produce shale. Some wells within a certain part of the Permian, it's about 4 different counties. You could go at $29, $35. And it's around, 40 is a great number on average around for everybody where you're going to make money in shale in the U.S. But at $55, $60, that's great. At 80, it's awesome. 85, 90 where it is now. But again, it wasn't 130. So these guys are still going to be printing money and doing very, very, very well. It's just they're not going to, explode like they did last quarter with those numbers. So they might be down quarter over quarter, but still up year over year. Now, some of the things that I realized, one, I want to say this to you, that you made a good point with Berkshire Hathaway. And the reason why everyone knows, you don't know who's adding really until the 13Fs, but the reason why everybody knows is because when you take more than 10% position, you have to file. So that's why we knew everything that was going on with Oxy. It's not a surprise. The other thing is when you're looking at 13Fs, you want to look at who's buying it. If it's Bridgewater, it's not a big deal. They're going to list like 200 stocks that buy and sell and whatever. They're in and out in 1 second. They don't care. You want to look at the managers, whether it's David Tepper, whether it's Einhorn, even Soros' fund, Bill Ackman. These guys buy, and especially Berkshire, they're going to hold that position for a long time, and chances are they're going to continue to add to that position, which is big. You don't want to just look at 13F and say, wow, Bridgewater or some of these high frequency firms are buying because they're not long term holders. So when you see Berkshire in, you could actually come in a little bit after him and be okay because he's going to hold that position for years. That's what they do. A lot of these guys do that. A couple of things that I would note with these is lots of Amazon buys and ads. Seth Klarman, Soros increased Amazon position by 25%, over 2 million shares. It's a very, very big position. You're looking at David Tepper, Third Point, Viking, all bought Disney. Tepper also initiated a position in Netflix as well. So he's just looking at streaming, and both of them, like I said, I thought Netflix was a much better buy than Disney here. When I look at Bill Ackman blew out his position in Netflix, right? He took a massive loss on that. It was 3 million shares. Again, once he was blowing out, Tepper was like, okay, I'm going to take the opportunity to buy some.
Can I comment on that?
Yeah.
I think this is the best manager job in 3 months. If you look at that, he bought no new positions. He didn't add to any. He decreased Hilton, and he sold the whole position Netflix. That's the easiest work in 3 months in the world.
And he gets paid a lot of money.
Exactly. He didn't do anything. Gosh, what the hell?
He was out after that massive fall, which was even before the market really started tanking.
I mean, I'm poking fun and having fun here, but hey, let's trim this, sell all that, and you don't do anything else. Perfect.
Which is fine. That's great. And pay me my 2 and 20.
I'm jealous.